You're welcome to another edition of the Economy and Politics Show, where we discuss the economy as it affects the populace. Today is Tuesday, December 15, 2020, where we take a look at developments in the oil and gas sector. Our topic of discourse is attracting strategic investments in Nigeria's oil and gas sector. Let's give you an overview of what we'll be discussing today. First, the pump price reduction in Nigeria, FBN Quest analysis on new COVID-19 vaccines and the crude oil price, FDC perspective on OPEC ramping up of oil production and implications for Nigeria. We'll give you international oil and gas updates, and we'll focus on the topic of discourse today. Let's first begin with the fact that the federal government has reduced the pump price of premium motor spirit, otherwise known as petrol, from 168 naira to 162 naira 44 kobo per litre. This took effect from yesterday, December 14, 2020. The Minister of Labour and Employment, Dr. Chris Ngige, while speaking to newsmen at the end of a meeting last week, said that this would have effect on the whole value chain. While briefing the press, the Labour Minister revealed that as part of the meeting, a technical committee has been set up to ensure price stability in the industry. The committee is expected to conduct an appraisal of the market forces and other things that will ensure stability in the industry will report back to the larger house on January 25, 2021. According to the Labour Minister, the discussion was fruitful, and Nigeria National Petroleum Corporation, which is the major importer and marketer of petroleum products, and customers have agreed that there will be a slide down of the pump price of PMS, and that the price cut will get at about 5 naira per litre, and that the price cut will take effect from Monday, December 14th, 2020. Let's get on to FBN Quest and its discourse on the developments of the vaccines, which of course has given boost to the oil price. The price of UK Brent crude last week rose above $50 per barrel for the first time since March on positive sentiment around the new vaccines for COVID-19 virus. Infections are soaring in many advanced economies, and the inoculations have only started last week. Markets, however, can see a recovery in demand for crude ahead as travelers get back into their cars and into aircraft in large numbers, and industrial firms increase their production. Analysts of repute cannot come up with a convincing timetable, but they can identify the outlines of the recovery. Further, they can reasonably assume that regulators will give the go-ahead for additional vaccines on top of the 3 already approved. The vaccines are coming, and OPEC Plus has again shown relative discipline. The initial plan had been a reduction in its aggregate output restraint of 2 million barrels per day to 5.7 million barrels per day from 1st January, but having noted the fragile condition of demand for crude and of the global economy, it agreed earlier this week to a smaller cut of 500,000 barrels per day. Perhaps as a sweetener to those parties such as Russia pushing for a larger reduction, the agreement is subject to ministerial review on a monthly basis. A recovery in oil revenues, according to FBN Quest, will be the fastest exit from Nigeria's current macro underperformance. A sustained increase would ease pressure on the public finances, the reserves, the current account, and the naira exchange rate. It will also enhance the credit story of Nigeria on the Eurobond circuit. FBN Quest says some confident talk of the prompt passage of a new industry bill by National Assembly is very key. It cautions that even if the president was able to sign a bill into law in the months ahead, the best possible impact on investment, production, and government revenues will not be felt for at least 3 years. Looking to the medium term and beyond, FBN Quest believes that fossil fuels have better prospects than many commentators acknowledge. Life with COVID has reinforced the focus on climate change, certainly, and some listed Western oil majors have made ambitious pledges on their carbon footprints. According to FBN Quest, yet we should not overlook the pivotal role of state-owned oil and gas producers within OPEC+. Saudi Aramco springs to mind, along with Gulf allies and Russian producers, whether or not they had private shareholders. That's a very interesting perspective from FBN Quest on that aspect. Now let's look at financial derivatives, talking about the fact that the OPEC agreement to ramp up crude oil production has implications for Nigeria. And with what we saw last week, for the first time, $50 per barrel price, FDC says the implication shows that Nigeria, as a price taker, stands to benefit from an ease in output cuts, as agreed by the OPEC, as that means it can produce more. This will boost exports earnings for the country significantly and government revenue from oil. Oil prices are currently trading at over $48 per barrel, currently $50 per barrel, which is 20% higher than the $40 per barrel 2021 budget benchmark. An increase in oil revenue will increase forex inflows and could increase the ability of the Central Bank of Nigeria to support the naira. The currency, according to FDC, has weakened by over 30% year to date on limited forex supply. Rationing and heightened forex demand are part of the developments. Let's get on to international oil and gas updates. Key things are happening in the global oil and gas industries. First is the fact that there are signs of demand rebound in Europe. Many European countries went back into lockdown in November but are loosening restrictions. According to Bloomberg, the road usage is on the rise, hitting a 2-month high, which definitely means that it's going to have an impact on the utilization of gasoline and petrol. Mexico state oil company Pemex has suspended work with Vitol. Pemex suspended its business with Vitol after the oil trader paid $160 million to settle bribery charges. Vitol settled the charges for paying bribes in Brazil, Mexico, and Ecuador. Indeed, there's a cost for paying bribes in the oil and gas sector. People should watch out for that. ExxonMobil, amidst all the whole challenge in COVID-19, has made a discovery in Suriname. Its partner Petronas, that's the state oil company of Malaysia, has announced a discovery in offshore Suriname, the first in the country for the partnership. The discovery adds to Exxon's already large footprint in neighboring Guyana. So you can see that Exxon is doing a lot in discovery, Guyana, Suriname. The US SEC, the Securities and Exchange Commission of the US, will vote tomorrow on whether or not to approve new disclosure rules for oil, gas, and mining companies related to payments to foreign governments. It is the third iteration of the rules and stems from the 2010 Dodd-Frank law, which came into effect under the administration of former President Barack Obama. Now let's go on to some development that the Donald Trump administration in the US is fast-tracking a proposed 2,100 lease cell in Utah for tar sand developers. That's something that one has to follow. Next is that Germany hopes to insulate Nord Stream. Now, the Nordic countries have the stream projects, pipeline projects. So Germany is looking for ways to insulate the Nord Stream 2 project from US sanctions. The huge pipeline is responsible for more than 90% finished and held up gas distribution in the region. For those that continue to follow the development around global warming and, of course, renewable energy, the oil and gas sector, the European Union is clinching a deal on tougher CO2 targets. They've agreed to tighten climate targets to 55% reduction in CO2 by 2030. That's from the 1990 baseline. They'll ramp up the ambition from the current 40% reduction. This means that carbon prices in Europe rose to 31 euros per ton, an all-time high. Texas, the home of oil and gas in the US, is waiving a ban in terms of environmental rules. The Texas Railroad Commission has been banned from enforcing a string of environmental rule waivers after a judge ruled the agency had failed to provide the public with adequate advance notice of such moves, first proposed in the spring. The top shale gas basins continue to bleed cash. The fracas in top shale gas basin, the Appalachia, continue to bleed cash despite the deep cuts in capital expenditure this year as a result of the plunge in gas prices in the first half of 2020 due to the mild winter early in the year and depressed demand later, on which the pandemic brought. Investors are turning to different levels now. Bond by Shell, investors are increasingly turning to clean energy, according to Wall Street Journal. So private equity has done more deals in clean energy than oil and gas in 2020. And that's not surprising. Special purpose acquisition companies, SPACs, are a new popular vehicle, raising money, going public, and only then they merge with a startup company. So that shows that 2021 will have much better prospects for those in renewable energy. Some pipeline operators with pipes already in the ground will see a very huge challenge in their operations, considering the shortage of transportation of these products that has to do with oil and gas. They will likely see the value of their products, the existing pipelines, rise amid a lot of scarcity of infrastructure, analysts are saying. From oil major Royal Shell, an interesting story says that some top executives at the company have resigned over a disagreement over how quickly the company will pursue its clean energy transition. So everybody's talking about clean energy. That's the big thing now. And from Reuters, there's a report or story saying that oil majors are beginning to take advantage of tax havens. The investigation shows that oil majors have shifting billions of dollars in profits to tax havens, often in islands in the Caribbean, where they will not go through all those tax hassles. In 2018 and 2019, according to Reuters, Shell earned more than $2.7 billion, about 7% of its total income in those years, tax-free, by reporting profits in companies located in Bermuda and Bahamas that employ just 39 people and generated the bulk of the revenue for other Shell entities. Very interesting things that some oil and gas companies are doing. Well, if you're in New York, you have to brace up for some interesting developments. The New York State Common Retirement Fund says it will divest itself from the riskiest oil and gas stocks by 2025. They're now looking at something big. $226 billion pension fund, which is the largest yet to divest from fossil fuels. That shows you that, this whole story about renewables is big time. And for those that want to analyze losses for this year, the oil field services in the US lost 91,680 jobs since the market downturn started last March. Very, very challenging for oil servicing. Then for those in the liquefied natural gas, there's an update from Wood Mackenzie that says that 77% of new liquefied natural gas projects are at risk in a 2-degree climate scenario. In other words, climate policy will result in renewables outcompeting LNG. That is one story that you have to take seriously. Now let's move on to our key focus for today. Why do we need to attract oil and gas investments? Or what are those things that will help us attract oil and gas investments as a country? Like earlier said in the updates today, the Petroleum Industry Bill passage and signing into law will be vital. If that is done, then definitely we can start expecting people to come in and say, I want to invest. New level in the oil and gas sector. Second is transparency and accountability, particularly in the petroleum ministry. Whether it has to do with the oil rounds for blocks of companies or the location of various blocks and platforms, down to governance, and down to how the entire ecosystem operates. Transparency and accountability in the petroleum sector and the overall oil and gas industry are very key things that investors will be looking at. Liberalization of the Nigerian National Petroleum Corporation through the laid down privatization rules. Like we said earlier, there are some state oil companies today globally that are doing very well because of that liberalization, partial, structured, well articulated, has helped them to boost capacity. Talk about Saudi Aramco for Saudi Arabia, Petrobras for Brazil. Those are good examples. Nigeria needs an effective gas policy framework. We're seeing some efforts in gas, but it has to be cohesive and coherent to attract investments. We need stability in the Niger Delta. That's the center point of activities. So as long as that region is well taken care of and is stable and peaceful, then we can expect more investments. We need safe and accessible ports and harbors. This also includes free zones, oil and gas free zones. These places have to be safe and accessible with the necessary infrastructure, roads, another infrastructure, rail, to assess them so that we can get in oil and gas platforms. And these are part of the things that encourage investors. Also, we need to see infrastructure, a robust infrastructure framework in the country that also encourages oil and gas investment. Part of them are road, power, rail. So if we have at least 3 of those things well connected and functioning effectively, we can see some optics in terms of improved investments oil and gas from 2021 and beyond. Last but not the least is sanctity of contracts. As you know, we have joint venture partnership, federal government and oil and gas companies. That's an example of partnerships that has worked, and as long as the sanctity of contracts in the industry, it will attract more investment, and that's key. That will be all for today's edition of the Economy and Politics Show. You can send your views and comments on what we can do to attract more investments in the oil and gas industry. Send them to news@prochanging.com. We'll be happy to receive them and respond appropriately to you. Also, you can log on to our website, www.prochanging.com. When you get to the platform on the right side, scroll and you check for oil and gas. There you can get all the updates on oil and gas industry. Thank you for being part of the show today. Till we come your way again, thank you for watching. Have a nice day and stay safe.